The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good evening, ladies and gentlemen. We welcome you to our virtual investor forum. I'm your host, as usual, Dan Theok, Senior Vice President of Investment Banking. Today we'll be talking about WISYNCO Group Limited, and joining us are none other than Chairman William Maffood alongside CEO Andrew Maffood. Also online on our panel, we'll have our CEO Gary Peart. Apologies on behalf of our Chairman Christopher Berry, who's unable to make it this evening. So first up, Andrew, William, welcome to the program. Great to have you guys here.
Thank you, Dan.
Thanks, Dan. Thanks for having us.
And Gary as well. Thank you for having us.
Excellent.
Welcome.
Excellent. If you're a fan of the content, subscribe to stay up to date with our uploads, and be sure to hit the bell to receive all of our notifications. We publish videos just like this just about once a week. Don't forget to stick around to the end of the program to send in your questions and answers. You can submit your questions on the live chat. If you're looking to embark on your very first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media today to get started. Well, as we promised, here it is, the big boys themselves, WISYNCO Group Limited. WISYNCO is a proud Jamaican company, manufacturing distributor located in St. Catherine. The company operates from two main facilities, including the Lakes Penn campus, which houses the corporate offices, the water manufacturing plant, and distribution activities, while the Marl campus manufactures all other beverages. WISYNCO also owns the Domino's Pizza restaurant chain, which is located at Isle of Wight.
It's actually a correction there. It's not owned by WISYNCO.
It's not owned by WISYNCO.
No.
Oh no, you sold it.
It's owned by a company associated with it.
Yeah, it's a parent company.
An affiliated
Yeah.
company.
Yeah.
Okay, my bad.
No?
Okay, WISYNCO is also a part of the Coca-Cola system and markets an extensive and diverse portfolio of 142 brands from leading food and beverage manufacturers locally and across the world. Its products are exported throughout the Caribbean, as well as the United Kingdom, the Netherlands, the US, Canada, Guyana, Panama, and Suriname. WISYNCO continues to expand its portfolios in new and existing categories. Every decade of WISYNCO's existence has seen innovation and growth through new industries, new partnerships, or export ventures. The company became publicly traded on the Jamaica Stock Exchange in early 2018. And at WISYNCO, innovation is viewed as the most effective driver for long-term sustainable shareholder value. Now, let me tell you a little bit about these two gentlemen we have with us. Firstly, William Maffood, who joined WISYNCO approximately 35 years ago in '88 as a warehouse supervisor. Since then, he served in many different roles and has set the company on course for greater success. After years of developing the distribution company, he was appointed MD in 1994 and was later named chairman of the group of companies in 2004. Over the years, William has served on many boards and institutions, but he values his work in the areas of service to his country the most, and mostly does this through his presidency at the PSOJ. Now, Andrew Maffood worked at PwC North York in Ontario for 3 years before moving to WISYNCO Trading Limited as the FC in 1991. He ascended through the ranks of the company from Group Finance Director for 6 years before becoming CEO in 1997. In 2017, he guided the company through what was at the time considered the largest IPO on the Jamaica Stock Exchange, with shareholders seeing their investment double within a few short years. In 2023, Andrew received the Order of Distinction in the rank of Commander Class for his contributions to manufacturing and distribution. Welcome again, Andrew and William.
Thank you, Dan. Thank you for having us.
Absolutely, and it's a pleasure to have these two distinguished gentlemen on the program to talk about one of my all-time favorite companies, WISYNCO. First up, Andrew, I believe you have a presentation you'd like to make for us.
Yes, both my chairman and myself have a short presentation to go through. So I'm going to ask our chairman to maybe walk you through some of our brands that make up WISYNCO so that you can see the brands many folks know us for some of the beverages, but there's a wider portfolio of products that we have in the portfolio.
Thank you. So, just to give you a little background, WISYNCO, a lot of people don't know, but it originated in the manufacturing space in 1965 under the headline, or the company at the time was West Indies Synthetic Company, and that's where the name comes from. We got into what I would call fast-moving consumer goods segment of our business in the early 90s, when Andrew and I were both very young in the company. And we started with some major importation and distribution of some key partnerships. So we had, for example, the General Mills portfolio, which is Pillsbury and Häagen-Dazs. We had some other brands at the time, Ocean Spray, and we no longer distribute those. But that got us into the water and the cran water. And in 1996, we started production of our own brands, which is Bigger. In 2002, Boom. And then in 2002 was Water. And then in 2010, the Boom brand. We expanded our portfolio with a number of other, quite a number of other distributed and imported items. And when we lost the Ocean Spray business, we also took the decision to partner with Tradewinds. So we are, through our holding company, family holding company, we own 50% of Tradewinds, which is a range of true juice and true and dairy products. We also have partnerships where we own 30% of St. Mary's Snacks, which is in partnership with Jamaica producers. And then our holding company also has a stake, an equity stake in Worthy Park Estates. And so the family, through that acquisition, created a partnership for WISYNCO's distribution, and we do 100% of their local distribution. We have great partnerships with companies like Kellogg's in the cereals and Pringles snacks. General Mills, as I'd mentioned earlier. We have Dr. Pepper Snapple, which was acquired recently by Keurig, and they have the Mott's brands. We do some Nestle, the ice creams. As a matter of fact, if you buy ice cream in Jamaica, 9 out of 10 times you're going to be buying a product that WISYNCO sells. So we sell almost all of the brands, including the locally produced ice cream brands. So that's on the brand front, and I'll turn it over to Andrew, who's going to give you a little bit of background on the finance.
Okay, thank you, Chairman. So our year starts July 1st and ends June 30th. And that's another one of our innovations, the grape water, which we started selling in fiscal year 23, and it's doing very well. Looking at the year that ended June 30th, we saw a very strong demand for all our products. In fact, the year 23, I would say, marked WISYNCO at full capacity, and which triggered us to embark on a major expansion which we're undergoing at this time. So our revenues grew to 49 billion, an increase of 25% over the prior year. Our gross profit was up 27% to 16.8 billion, and our gross margin at 34.6%, which is about 7 basis points actually over the prior year. Net profit climbed 21% to 4.9 billion. The net margin shrunk a little bit, 3 basis points, essentially due to some of the inflationary pressure, and earnings per share moved up by 21% to 131 per share from 108 in the prior year. Our sales, taking a look at quarter by quarter in the fiscal year that ended June 30th, 23, we had great growth in all quarters, Q1, Q2, Q3, and Q4, with Q4 actually being a record at 12.7 billion. We noticed, in Q3, which is normally a slower time for us, January, February, March is normally a slow quarter. We saw solid demand at that as well, and that demand we're seeing continue as the market expands, and a 5-year revenue trend shows us at about 12.6% CAGR, with a nice chart, effectively going from 26 billion to 49 billion over a 5-year period. Gross profit by quarter as well. for each quarter, obviously doing very well with gross margins well, as I said, average 34.6%, and gross margins 27% higher. Net profit each quarter as well displayed, ending at 21% over the prior year. Earnings per share, a nice chart again for the 5-year ending June 30th. So when we listed, as Dan had said, in fiscal 18, we saw our earnings per share at 68 cents per share, and the latest financial year we're at $1.31, with EBITDA really, the company really doing well in terms of cash generation and EBITDA as well. EBITDA coming in at $7.5 billion at fiscal year 23, or 23% greater than the prior year. Return on equity, or return on average equity, we were able to go back up into the 25s, and hopefully we continue that chart going up. The objective is to obviously increase our shareholder value by generating higher returns on our equity. That ended at 25.3%. And our asset turnover, return on assets, closed at 17%. Our dividend actually we've managed our dividends carefully over the years. In our prospectus, we guided a 20% after-tax dividend payment to our shareholders, and we have done better than that every year since we've started declaring dividends as a public company. 25% approximately the first 2 years, and then we're at 37. My eyes are sometimes give me a little bit of trouble. 37, 37, and 34. And this last year, we're now at, for the final year here, June 23, we ended at 45 cents dividend for the year, which is approximately about a 2.3% dividend yield using the closing price at June 30th. In terms of the financial health of WISYNCO, it's I would say very healthy. The current ratio at 2.8, a debt to equity of 21%. We took on some debt this last fiscal year of about $3.2 billion from one of our bankers to finance the expansion that we're undergoing. Our cash ratio, which is essentially our cash divided by our current liabilities, essentially showing that we have $1.30 of cash for every single current liability that the company has. Return on invested capital 21.1%, and total assets ending up at about $33 billion. And a small chart showing our total asset breakdown between cash, inventories, property, plant, and equipment, some prepayments and receivables. Yeah, we can go. So one of the things that we've spoken about is that we're on a major expansion program right now. By the end of fiscal 24, we'd have put in place 5 new lines, and we're going to move our production, almost doubling the productive capacity from 2 million cases to approximately 4 million cases. This expansion will give us a real exciting future that we feel for our company, because it's going to be in some new business as well as ensuring that we have availability of our products for all markets, all sizes of our products. And we expect we have actually one line going in right now, and we're hoping that line will be commissioned into saleable product this month. And by February 24, we should have that capacity increased by 50%. This move will certainly catalyze revenue. It will certainly give us much more availability for the export markets. As we've, in this last fiscal year, one of the challenges that we had was actually meeting the demand for our export, both the local and export markets. So if we just go back one slide, yeah, that building that you see there, that's our main distribution center in Lakes Bend. We do have production there as well as our cold storage facility. And what you see being under construction there now is approximately 200,000 square feet for the expansion of organic beverages, as well as some new products that we have in the pipeline coming. And I think on the next slide, we have a small little embedded video. I'm hoping it came up in the link that we shared. in the next slide. No video came up. Okay. Must have had some technical difficulties in the file share. And then giving back, I'm gonna ask Chairman William to.
Pleasure. Thank you, Andrew. And Andrew as a CEO is a hard act to follow. But one of the areas WISYNCO has really focused on, besides our partnership with Food for the Poor over the years, through our brands, we've done a tremendous amount of social and community work. This past year, we did a Hydrate to Educate promotion with water, where we actually gave $12 million to school children and to teachers. This was in fiscal 23. And an additional $8 million to students or children of WISYNCO employees and team members was also given in grants and scholarships. So that was one of the areas through the brand water. We did another set of promotions with Boom energy drinks, with housing, with Food for the Poor. We also have done and just launched recently a massive program which we're very, very excited about. We've partnered with Coca-Cola, who are doing this throughout the region and the hemisphere, which is Growing Together. And what it is basically is looking at our current customer base. We have about 13,000 customers across Jamaica, and developing programs to help uplift those customers through training and development. So online education portal, which allows them to improve their own business acumen and so forth. And so focusing on the small enterprise, especially, to try and help uplift them and show them how we can, as partners, help them to grow their business. And then, of course, as I mentioned, the Boom promotion with Food for the Poor, where we built, I think it was 12 houses, Andrew.
For the last couple of years.
For the last couple of years under the Boom brand. So Boom giving back to the communities in the most needed areas. And then finally, and one of the areas we're very, very focused on is our environmental stewardship. This started back in 1996 when we started the soft drink business. We wanted to ensure that we could close that loop in terms of the plastic entering the system. We were instrumental in starting the Recycle Partners for Jamaica, which is an industry-led partnership where every single manufacturer in Jamaica of plastic bottles puts a contribution to this entity. It's independently operated, chaired by Dr. Damian King, and they are now at a national collection level of 30% of all PET bottles, with a commitment to get us to 50% by the end of 2024. That would mean that 1 in every 2 bottles that's produced in Jamaica would be collected and recycled, with the intention to close the loop and turn that plastic material back into locally produced bottles. We also are very, very focused on water and water preservation, and recently had many discussions with the Water Resources Authority to try and find a way to utilize the least amount of water that we take out of the environment in terms of our total production process. So I think when we look at as a company our goals and objectives, I think we're meeting in many ways. Besides the financial objectives and goals, we're meeting the needs of the communities that we work within. And we want to thank, our theme for this year's annual report is to thank the people, the partners, our customers and stakeholders that are the ones that drive and create this continuation of our business. Turn it over to you, Dan.
Yeah.
Okay. Well, thanks, gentlemen. If you didn't know, you guys know now. So as usual, I want to do my quick look at the numbers from a Mayberry perspective as a financial analyst and expert, and then we'll go into some Q&A so we can talk a little bit more, do a little bit of a deeper dive on the numbers. As you said, William, Andrew's a hard act to follow, so I think he's covered most of my main points, but I do want to start on my first slide with the, quick financial overview, and I'll be able to move through very quickly because of the good job that Andrew did. And, quite frankly, we're very impressed by the increase in sales, 25% growth in sales. As you said, you've had 12% CAGR over the last 5 years, so that's been pretty impressive. That growth in the sales has translated to 27% growth in gross profit. So it's good to see that growth in sales coming with you protecting your gross profit margins. And that pretty much flows all the way through down to the bottom line where we see the profit after tax also growing to $6.3 billion, also 26% growth. Share price closed at $19, and we look at the trailing earnings, that translates into a PE ratio of 14.6 times. In a main market average, that's about 10 times. So some might think it's trading rich, but because they've demonstrated such strong growth in profitability and in revenues, we think the market's sort of recognizing that in the stock price. Now, this is one of my favorite IPO experiences, and one of my questions to Andrew and William will be, why did you IPO back in December 2017? I'd like to get the story so we could share that with you folks. But here's a company that did this IPO back in December 2017, came out at $7.87 with the objective of raising $6 billion. It was oversubscribed. $17 billion was chasing it. And so for those of you in the general public like myself, you only got about 19% allocation. But here we are, 5 years later, and the stock price is up 140% to $19. And guess what, folks? This is only going to continue growing in time. We talked about the growth in the asset base, growth in equity base. And, what's impressive is they have $10 billion of cash and $4 billion of debt. So when he says his debt to equity ratio is 20%, it's not net debt, folks. It's gross debt. I mean, if you look at the net debt, there's no debt because they have $10 billion in cash. Am I correct, Andrew?
Absolutely.
Okay, just checking. So great company, little or no leverage, growing by 25% in the last year. They talk about beefing up their production. And what's the capital expenditure, Andrew, that you're going to make that happen?
I think we'll probably end up at about $6 billion.
$6 billion, so $10 billion in cash.
Yeah.
We'll spend $6 billion in capex to increase capacity by 50%. Can you guys see what's about to come here? So great company, market cap $71 billion. So it's one of the bigger market caps, certainly doing impressive with profit, before tax at 6.3 billion and 4.9 billion after tax. No complaints there. Next slide shows the trend in profitability. And, here we are 5 quarters in a row at over $1 billion per quarter. And again, come Feb 2024 next year, we expect to see more growth as the production gets going. Next slide shows the share price. And this sort of demonstrates, price has been, relatively flat in recent times. It's actually had a high in the last 12 months of $25, an all-time high closer to $30, something I've tracked from day one. It's just a great stock. I don't know what to say. I really have no complaints. It's impressive to see, despite that 25% sales growth, that you guys have kept your inventory turnover. You've in fact reduced it from 50 days to about 45 days, so 10% improvement. Their accounts receivable days are reduced by about 12% from 42 to 37 days. So you guys are getting it all right. Congratulations. You're growing the business while tightly managing the working capital and ticking all of the boxes for me. So definitely a buy for me, even at the 14 times PE, because you've heard it here. The expansion is on its way. New lines are coming. They've demonstrated their ability to grow the business and to keep growing. And by the time we finish the Q&A, I think you guys will all be converted like myself. So good deal. That's my analysis. Love the stock. Can't get myself enough. When you look at the top 10, you're going to see big holders like NIF, Sagicor, ATL Pension Fund, etc. So this is a blue chip held by all of the big funds. And so if it's still not too late to get yourself some WISYNCO, I think anything below $20 is a great buy. We're going to come back in 12 months' time, and that's going to be up 30-40% easily, in my view. Okay, so we've got some questions that we're going to discuss, guys. And again, folks, remember, if you have questions, send them in online. We'll get to them in about 20 minutes. But between myself and Gary, we'll have, a few questions for these guys. So first one from me is, what led to the stellar performance in revenues in the last year? So CAGR is 12% over the last 5 years, but in the last year, 25%.
I would start off by saying that what we saw in Jamaica coming out of COVID is a real, a huge expansion in the demand for entertainment, for tourism, for restaurants, outgoing activities, and all those activities fueled a demand that we felt was, and we've seen it with other companies and especially in our brands, really solid demand. And it's not just in Jamaica, we've also seen it in some of our export markets. So one of the things that and it's continuing. We see with unemployment way down, with vehicles on the road, you can't even park in any of the plazas. Jamaica is going through major expansion as a country. People are consuming more, and as a fast-moving consumer goods company, I think we're positioned really well to continue growing revenue, and we're putting in the capacity to take advantage of it as well, and to not frustrate customers as well with supplies.
Good deal.
Yeah, I want to add just
Please,
as
William.
well, Dan. I mean, Andrew is much more involved in the day to day than I am, and so he really has a much better handle on it. But one of the things that you also have to layer on to that, which is what's happening on the macro sort of picture, is also the work that we have done over the last 20 years building the relationships with our customers. So, I was just out in the market a couple of weeks ago, traveling through St. Anne and visiting some small accounts. And what you find is you're going to every little shop in Jamaica today, and there's a WISYNCO fridge, whether it's Coca-Cola, water, True Juice, or an ice cream freezer. And we have, somewhere upwards of 10,000 of those units placed around Jamaica in 13,000 outlets. And we're increasing, we're investing heavily in both our distribution infrastructure as well as on the capital for the sale of those products. That will augur well to the continued growth as the economy improves.
Yep, got a bit of a follow-up question to that. Not a big soca fan, but there is a song that talks about we have a truck on the road.
Yeah.
William, how many trucks do you have on the road?
So we send out on a daily basis close to 400 trucks.
400.
Yeah. And I try to put it into context. We import and also bring into our distribution center on a daily basis almost 100 containers of finished product between our local production and imports and finished goods from our factories and our partners.
100 per week?
100 per day.
Per day.
40-foot containers.
Wow.
Yeah. So the logistics piece of our business is where we really have to focus. And so, Andrew can speak to this, but we're investing heavily in terms of our operational output and capacity. We're investing very, very heavily in technology. There is a major investment coming in terms of our ERP upgrade. And that is all in order to prepare for that next wave, which we see coming in the next year.
Great, Andrew. I think you'll take this one. How has the company handled its challenges with production this last year, especially with the great growth? And
it's a great question, and I'll tell you, and I want to give a big shout out to all our WISYNCO people, because we have one of the most committed teams that in terms of production and also in our operations to move the amount of product that you heard William speak about. In terms of the production challenges, we didn't have challenges from a logistics raw material supply issue like what happened in the prior year when there was like port congestion everywhere. Where we had production challenges is that we were pretty much at full capacity, and we have an exceptional engineering team. We actually had a line that was mothballed, and our engineers were able to resurrect it and put it into production, and that also went into full production as well. So we got some great extra production output from that machine. And I would say, the challenges that once you're at capacity, one of the things that happens is you also have a lot of maintenance issues and we struggled through some of those issues, and it was one of the reasons that drove us to improve the availability of capacity that we have, so that when a machine needs to go down, we don't risk not having product to sell. And so I think that's we're on the cusp of overcoming the majority of those challenges right now.
Excellent. Gary, you've been quiet so far. Surely you have a question for one of these two kindly gentlemen.
Very unlike you, Gary.
I have about four. But before I start, I want to congratulate my brother Andrew on his national award. I think you spoke about one in 22, but
No,
I'm
this year, it
sure I
was just
saw him.
last week. This week,
Yeah,
actually.
I'm sure I saw him recently with his new award. Congratulations.
Yes, thank you
Andrew.
very much, Gary. Appreciate that.
All right, so I have a couple questions. One has to do with some of the answers that you've just given. Now, the beauty, in my opinion, about WISYNCO is that you've been able to go against the normal trend of a distribution company. There's always a concern that you get a brand, you build a brand, the brand leaves you, and all that investment goes. WISYNCO over the years, as you have indicated, you've built your own brands, bigger, boom, etc. And most importantly, I think the recent genius is because the question is that, when you build your own brand, it takes a lot of time and effort. And so the recent transactions where you get distribution and also get equity in the company that has it, I think is brilliant. So my first question is, what percentage of your profits come from what I'd refer to as your proprietary brands vis-a-vis your other brands? That's one. Two, the transactions you've done where you have your distribution, where's the equity held? Is it held in a listed company, or is it in your family company? The third question, a while ago, Andrew, you mentioned that some of the growth areas is in tourism, etc. What's your footprint in that area, and how can you improve it? And the final question, when you look at the numbers that you guys just spoke about, they're phenomenal, return on equity at 25%, etc. How are you going to continue and sustain that growth rate? How much of that is going to be organic, and how much of that you believe it will be based on acquisitions? Because I don't see how you can maintain organic growth at 25%. I know it's a whole bunch, there's 4 questions, but the fifth one is a very simple one for me and my viewers. What the hell is CAGA? You and Dan and everybody talk about CAGA. What is CAGA?
Let me start. I think I want to take Dan, if you don't mind, Andrew. So you asked a question about the first question was in relation to
Proprietor brand.
Yeah.
proprietary brands. Okay. So if you look at the WISYNCO of old, and I spoke about when we used to distribute Ocean Spray as a product, as a category. Right. We actually started Ocean Spray in Jamaica back in 1991, 92.
Cranberry,
yes. Cranberry, that's correct. And we built a platform and a business here that was the #1 market in the world on a per cap consumption for Ocean Spray branded products. They took a decision to move it to Pepsi at a regional level because of Pepsi's footprint. And they did that, and the business went down the tubes. I mean, today Ocean Spray is a fraction of what it used to be, 15 years ago. But it was a great lesson for us. I'll never forget it, because in the year that we terminated that relationship, the Ocean Spray business was north of, I think, probably 15% of our total group's revenue. So it was a meaningful hit. But within 1 year, we replaced that revenue in other areas. And it taught us a very, very clear lesson. And that was that we had to set our own path and destiny. And I think, Gary, the strategy that we have adopted is partnering with various businesses, and regardless of how those partnerships work. So in the case of Tradewinds and Worthy Park, the holding company which owns the WISYNCO group, 74% of the public company, is the same company that holds the equity in those two companies.
Okay.
And it came with a distribution agreement which said that the WISYNCO public company would have the distribution rights for those businesses. In the case of St. Mary's, which is our partnership with Jamaica producers, WISYNCO, the public company, is 30% shareholder in the partnership in the joint venture company.
So the equity and distribution is in the public company.
That's
in that
correct.
case.
That's correct. In that
Okay.
business, yes,
Right.
that's correct.
And to add a little color to one of your questions, Gary, those strategic partnerships that William spoke about contribute 80% of our revenues. We don't necessarily look at net profit by brand or by product, but each product has to stand on its own, and what we do is we ensure that the margin can cover all its respective costs of warehousing and selling and distribution. And as you know, once you're doing that, the excesses will flow to the bottom line. But one of the things that we can say is that our ability and our relationships with customers and the distribution that we've given to the companies that we represent in terms of the strategic partners, it has been a win for them and certainly a win for WISYNCO as well.
And all of the relationships are basically arm's length in terms of, as Andrew mentioned. So the margins on each of those arrangements would be very, very normal margins in any distribution arrangement. And I'm sure your good friend Peter, you can ask him about his partnership with WISYNCO over the last, what's it been now, 10 years, Andrew?
Yeah, 10 years.
So over the last 10 years, I think Peter would agree that it's probably been one of the better arrangements he's made in his career.
So they're coding, folks.
He has a bigger smile. He has a bigger smile ever since he did that transaction.
They're coding, and big up to Peter McConnell. Saw him last night flying back in from the US. So guys, if 80% of your revenues comes from those relationships, and you're
But well, they don't finish answer all of my
Yeah,
questions.
I'm coming to you, Gary. We know I'm just making a point. CAGR or CAGR, combined annual growth rate.
Yeah.
And I just wanted to make the point, with a 10% net profit margin, you guys are kicking butt.
And I'm actually not happy with that, Dan.
You're
So,
not happy with the
so
10%
one of
profit
my
margin?
objectives as
Wow.
chairman is to push continuously, and I use the term with our executive team. I'm a constructive criticist, or I constructively criticize
Yep,
and push them to say, I think that as a company we should have upwards of 13 to 15% net
Wow.
profit after tax as a company.
Wow, very ambitious.
So
Did we cover all your questions, Gary? I
no,
think-
we had one about the
more?
hotel industry.
Oh yeah, good one.
And
Good one.
I'll speak to that as well. So we have done a tremendous amount of work in building those relationships. If you look at, I think one of the greatest success stories is our partnership with Coca-Cola. In 2006, when we started the distribution here for Coke with our partnership with them, WISYNCO at that time, and I was a very, very optimistic about the relationship and market share. But Coca-Cola had a 3% share of the cola market in Jamaica with Pepsi. All of us who grew up here know that it was only Pepsi available when we were younger. Fast forward to 2023, and Coke and Pepsi are pretty much on par in terms of market share. With
Wow.
Coke having gone through 3 or 4 successive years of having the greatest growth of any market in the world for the Coca-Cola brand. We continue to see tremendous growth in their portfolio. They've done a number of very exciting things like launching. They recently announced, actually just 2 days ago, the CEO, James Quincy, announced a partnership that is going to roll out next year with Absolute and Sprite. So ready to drink alcohol beverages. They have Jack Daniels and Coke. These are some of the innovations I think I see coming on the horizon for our markets as well. And I'm very excited about that. And so in the hotel industry, because of that relationship, we also control the non-alcoholic juice business, water business, and soda business. And there are only 2 properties, and I won't name them, but it's because of global arrangements with Pepsi, why they serve Pepsi in Jamaica, and the rest of them basically serve Coca-Cola and our water and beverages.
What percentage of your sales would you say, William, is towards the tourism sector? If you were to make a guess.
It's about 10% now.
Okay, 10%. Good deal. And Andrew, on the export phase, I mean, exports are relatively small in the scheme of things. I mean, how do you feel about, opportunities and you guys' ability to grow the export market?
So exports right now represents about 3% of our revenues.
Yep.
And as I said earlier, some of the challenges that we had locally with product supply, we were unable to actually supply some of the export orders that we had. But what we're seeing in markets like the big markets as
Yep.
well, the US, Canada, the UK, we have Big Up becoming almost a mainstream brand in the UK, and we're gonna be hopefully this month and next month pushing some real big volumes to the UK in Bigger, and the hope is that we'll continue being able to supply the demand there. And I know what we have coming, we'll be able to certainly expand the export business and maybe even look at maybe some in-market production to ensure availability. So we're very excited about the exports in the next year, 2 years.
Chairman William, what's your 3 to 5 year target for Andrew in terms of export sales?
So my target was 10%. A couple of years ago, I said that publicly, and I think we're on track. We had what I would call a little bit of a hurdle in the last year and a half with demand locally.
Right.
And, I mean, naturally, the local market is always going to be more important for us because of the relationships that we have here, as well as it's a more profitable market. But as we continue to see the demand, I mean, I think Andrew is underestimating the potential in the UK. Bigger today is one of the most sought after brands by the youth in the UK.
Wow.
You see, and I'm not talking about the Caribbean and diaspora. I'm talking about mainstream young people. You see them walking up and down on their skateboards and stuff, and it's a cool drink for the kids to have. So we're very excited about that, and I think that is going to be the driving in the short term, the driving force for us to grow those exports. In the US, we're also seeing tremendous uplift and demand for our brands, and with the advent of some of this new production, what we're going to be doing is we're putting in a can line, which is going to give us much better shelf life on some of the products. So like our Boom Energy drink, which now has maybe 90 days shelf life, in a can, we'll have 180 days.
Okay.
Much better opportunity for exports.
Makes sense. And 2 more for me, folks. We haven't forgot you. I've got a few questions coming in online. I promise you we're going to come to you. I got 2 more, and then I'll give Gary 1 or 2 more. Andrew or William, I don't know which one of you. What is WISYNCO's competitive advantage in a few words?
People.
Yeah.
I think our people. We and it's one of the areas we're working assiduously to continue to develop the people, uplift them. As an organization, I've given the charge to Andrew and the executive team in the last couple of months. I want WISYNCO to be the #1 company as a place of employment in Jamaica and maybe the Caribbean. I don't want people to look outside of WISYNCO when it comes to the desire to work.
And what's your staff complement right now, William? Andrew?
2,000.
2,000. Yeah, it's impressive, guys. And
But
I do.
if I could just add to the competitive edge, the people, as well as we're Jamaican. We understand what the products, what our people want as well. Our relationships with our customers, we're very customer centric. We go above and beyond for all customers, and I think just the way we live with our people as well is a big edge for us.
Those trucks on the road and the distribution points and assets you also have to be pretty huge.
That gives us a big advantage.
Yeah, absolutely.
Yes, definitely.
So I do want to commend you guys in terms of nation building. I've admired you both. We've crossed paths, William, on many occasions. You've given in ways a lot of people don't appreciate in the energy sector, giving back in the GP, and the same for you, Andrew, your commitment to food for the poor. I do want to make the point that here's a great company employing 2,000 folks, and you have a pension plan.
Absolutely.
And, that's great because, less than 20% of Jamaicans have access to pension in private or public companies. So again, I want to commend you guys for doing this, and we want to see more companies doing this as we try to focus on not just making profits and hitting the bottom lines, but building the people that make the companies move forward. So commend you guys for those efforts, and the pension plan. I looked at it, was great, fantastic, seems to be doing quite well. Keep it up, keep up the good work. We really appreciate you guys for that. Gary, last question to you before I move over to the social media questions.
Sure. Simple one. So, my good friend, the late Lashin, one of the things that made Lash go different was that Lash used to walk the storefronts. Jimmy Rolfe, Nestle, they used to do the same thing. And, one of the things is that back in the day, a young William Mafood fell into that category, where William is everywhere you see him, right? But as he's noticed, he has now been elevated to where the air is thin. He's now chairman. And, all these wonderful numbers. And yes, William is setting the targets, but succession, who is going to be that personality? I know you guys have targeted a young gentleman to do it, but I mean, his personality is just not a William Food. Who is going to be that person that carries that on? Well, let me stop there.
I think it's to be honest with you, Gary, I still do that. As much as I'm trying to breathe that thin, I'm trying to breathe that thin air. I have a hard time breathing it, but the reality is that I still, I go out in the market when I get the opportunity. I love to touch and feel and see. I see things when I'm in a store that nobody can tell me about it. The other day I was, as I said, I was in Center and I visited about 10 customers. I saw a product that was making headway, and I said to the team afterwards, I said, why has nobody brought this to our attention? So you can never stop that. And I think we have to create almost a culture of having that continue. I think regardless of who is going to become the future CEO or chairman or whatever, we must ensure that becomes a part of the ethos of and I think we have that in our sales teams. Mm-hmm. The people on the ground now have been able to build those relationships, and in a way, I mean, I walk into stores now. I see a sales rep and I don't know the individuals, or I see them and I know them because of the brand or the name tag or whatever it is, their ID. And when I talk to them and I see the passion that those people have on the ground for our customers and for our products and the teams, it makes me feel very, very happy and confident that we're going to continue to grow.
And I'll also add, I mean, William has done an extremely good job of training. We have a sales team that totals about a complement of about 700 people. And I mean, I won't mention their names here, but they are certainly, a bunch that he has trained over the years that understand the relationship, the power of relationships. So we have them. We have many Williams now, Gary.
Only one William, Only one William. It might be an Andrew, it might be a Don, but it's not a William.
Good deal. And I told a little lie. I have two more questions. William or Andrew, 400 trucks on the road. Have you guys thought about EVs? And tell me a little bit about your own energy solutions. And so maybe EVs could work well with you guys coming up with your own energy solutions. So any thoughts there?
I'll let Andrew take that one.
EVs, trucks. If we saw some good trucks, especially with the duty at, I guess, 10%, it would definitely be something to look at. And I'm sure they're going to be coming. And I'm sure it'll reduce repairs, it'll reduce, maintenance for sure.
And to the extent you're coming up with your own energy solutions in general,
Exactly.
right? And talk to me about that. I know you tried the solar route. You guys have now put in your own cogen facility. How's that going?
It's actually going very well. Our cogen facility is doing very well, and we've now backed it up with a 2 meg diesel engine.
Yeah. And
both engines are certainly performing very well. It's something I think we're going to be expanding also.
Yeah.
Some byproducts can come from generation, which is
cooling, heat,
cooling, CO2.
Yeah, excellent. Yeah.
So some of those
carbonation.
things, So some of those things we'll certainly look at. But but EVs on trucks, I guess when we see a good solution, we
Yeah.
probably look at some for sure.
Yep. Okay, I'll get Duncan Stewart or somebody else before you to talk about EVs. I think it's a great opportunity for the country. You know, talked about trying to reduce our energy bill to some extent, going clean and so on and so forth. So I think that's it from me. So folks, thanks for your patience. I do have a few questions coming in and some comments and compliments. I want to share all of them. You know, first one coming in from Ian Nurser. It says, I love this company. It's a sleeping giant. Ricardo Ramston says, greetings to all. Jerome, first one coming in from Jerome. Are there any new or original products that you guys will be manufacturing or launching soon?
There'll be a bunch. This year is going to be a year of innovation. This next year and going into the next 5 years, we see a lot of new products, a lot of new innovations, big boost to our present organic brands that we produce, but a lot of new innovations as well.
Good deal. Follow-up question also, are there any target acquisitions that you care to share or discuss?
We're always looking at great companies. We don't have any nothing to talk about yet. We have our eyes on some, but hopefully when the time is right.
Good deal. Are there any partnerships afoot with distributors in foreign territories that you are going to use to aggressively grow your exports of your manufactured products?
We do right now in the UK. We have a relationship with Grace. We have some relationships in New York with Iberia. We think that actually Iberia is a great company in the Northeast that we're expanding that relationship. But we're looking for other distributors in some other markets. We have great distributors in some of the smaller markets as well.
Mm-hmm. Okay, Orville Reeves is asking, does WISYNCO have a ESOP?
We don't have an ESOP. We do have a long-term incentive scheme for, to try and to keep good talent.
Mm-hmm.
We're finding as well, you actually asked a great question. Why did we go public in the beginning? One of the reasons that we went public was to encourage our team from the top to the bottom to invest in the company that they were employed to. And we've seen, a great response to that. But I think one of the things that, as the economic climate changes and the interest rates, move, it affects the value of some of that investment. So from the point of view of, is a ESOP a great thing? I think when, encouraging team members to buy in, but then, maybe keeping it at a higher level for that talent retention at key levels is that there's a balancing act.
Yeah, I'm a bigger fan of the incentive program.
What we do have is a great profit share scheme.
Okay.
That all team members are a part of as well.
Yeah, and I think it's important because, the ESOP, as opposed to our long-term incentive plan, which is basically a stock option plan,
Mm-hmm.
it gives our senior leadership options so the price is locked in, let us say at the end of our financial year,
Mm-hmm.
and they have a vesting period of 3 years, and then a further 5 years, I believe, to exercise at those prices.
Right.
Now, if you're a part of a growth organization like WISYNCO and you see the long-term benefit of owning shares in the company, getting the dividends and the upside in terms of the capital gain, then it's a great incentive scheme. And as Andrew mentioned, our profit share scheme is probably one of the most aggressive in Jamaica. We pay about 15% of our net profit after tax in profit share to our team members across from the very lowest employee
Top to the bottom.
right across the spectrum.
Yeah, that's impressive. That's impressive. And David Gray says, I love that. And I'm sure he's referencing to that. So I think, Gary, unless you have one more question, I probably can only take one more from social media and then look to wrap up. Let me know. Do you?
No, I mean, I have several questions, but I mean, you can go ahead. I think I've dominated enough already.
Yes. Yeah, I think
don't mind you dominating sometimes, Gary.
No, I like to give up that chance.
Yes. Well, I think actually, folks, we've pretty much run out of time, and I just want to again extend my thanks to William and Andrew for coming on the program. I personally think when you've heard these two gentlemen speak to the vision of WISYNCO and the plans to continue growing the business, and then you look at the CAGR over the last 5 years, and
All right,
what
Dan. So since we've gone back down that road,
Yes.
right? This
Uh-huh.
one is for the chairman.
This one's for the
I feel
chairman.
I feel sorry for the CEO and the company after this. But chairman, you know that a properly run company that has a consistent growth rate in a developed stock market, the PE approximates the growth rate.
Yes.
And so far, I mean, what we've been discussing is that you guys have been growing your profit in excess of 20 to 25% per annum.
Mm-hmm.
So at a PE of 14 times, given what you've just explained, the stock is significantly undervalued. Right?
I can't say that, Gary. If I said
but I
that,
just did.
right?
And I just gave,
Yeah.
You
and I
can
just gave you
say
a
that.
rationale for it,
Yes.
right? So any company chairman that over a period of time consistently grows at a particular rate,
Yes.
its PE should break away from what the market constraints are and approximate that growth rate.
Correct.
So WISYNCO should have a PE that approximate that growth rate. So if, as you said, you can push a team to move it to 30, 35, I mean, do the math. $1.68 times 35, Andre, is how much?
50 something.
Oh my God. Anyway, that's gone too far. Let's work it.
Good deal. So I'm with you, Gary. Like I said, I see 30 to 40% growth coming in the stock easily, provided they keep the growth rate going. And I have no doubt they will. We've heard enough. We've talked about the capacity, the new lines, the continued investment, $6 billion of CapEx investment, which is unprecedented for WISYNCO in the last 3 years. Unprecedented. And the brand, I mean, it's hard to argue. We talked about the competitive advantage in the people, the trucks, the relationships, the distribution channels, et cetera. So it's just a hard company to bet against. So if you're serious about investing in the Jamaica stock market and you don't have WISYNCO in your bucket, something wrong with you. And secondly, I have large investor friends who often complain about, you just keep talking about junior market, and I can't get the volume. I want to buy $1 million worth of this, or 20 million of that, and I can't buy $1 million worth of that junior market. Well, here is a company that you can buy $1 million worth, put it down, and in 5 years' time, you will do well. Yeah, preferably through your friendly investment broker, Mayberry Investments Limited. So, Andrew and William, thank you so much for being on the program.
Pleasure, Dan.
Thanks for having us, Gary and Dan. I'm really sorry that Chris wasn't here with us this evening, because I'm sure he would have been quite edgy as well.
Absolutely.
As he usually
I thought
is.
we were spicy.
Yeah. Good deal. So let me talk about our giveaway announcement. Thanks for that, guys. As promised, we'll now announce the winners of our giveaway, courtesy of WISYNCO Group Limited. So congratulations to at Clark Faith Tashali, at Radiant TRG_12, and at Pelpadoo. You guys need to read that. I'm horrible at that stuff. And with that, we'll bring today's discussions to an end. And I'd like to thank our winners for tuning in. We appreciate your support, guys. It's always welcome. Big thanks to William and Andrew for stopping by and being a part of the show. I'd also like to thank Mr. Gary Peart for his invaluable contributions to our viewers. Be sure to look out for updates on our virtual investor forum by following us on social media. We share all things forum related on our social media pages. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. And remember, wise investors, to keep safe and slow and steady wins the race. Goodbye, everybody.
Bye.
Bye-bye.
Thanks.
Education is the passport to our nation's future, for tomorrow belongs to those who prepare for it today. With every bottle of water you buy, you contribute to the academic development of our youth. Thanks to you, WATA is providing $12 million in education grants to students and schools island-wide. Nominate a student today at wataeducate.wisinco.com. Hydrate to educate with water.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.